Well, thank you very much, everyone, for joining us for this lunchtime. Hopefully it's not too grey and rainy there, wherever you are viewing it from. Hopefully you might be in a sunny place. So today we are going to be answering 5 questions a startup must answer with a bang. So it should be that either you've just started or about to start your new business and you want some guidance how to make sure that you do start with a bang. So I'm Nicky Larkin, I'm the MD of Goringe Accountants. I am your speaker for today and I'm joined with Pete.
Thanks, Nicky. Hello, everybody. Just to introduce myself, I'm here to help Nicky facilitate this webinar. She's going to be focused on delivering the information to you guys, and I will be handling the questions. It's a Q&A driven webinar, so please do ask the questions as we go. Just to get everyone on the chat, could I ask very quickly, for those who are here, have you run a business before? Maybe not your own on someone else's behalf, but have you run a business before? Yes or no? And whilst you're in the chat, could you let us know what you hope to get from today's webinar? What's the number one question you want answering? And we'll make sure we cover that off. And we'll come back to those answers in a second. Nicky, back to you.
Absolutely, yes. We want to try to make this lunchtime as useful as possible for you. So we want to make sure that you're ready, raring to go to launch your business. So my name is Nicky Larkin, as I've said. I set up Goringe Accountants 13 years ago. My sins. I have, so I've obviously successfully set up a business. I've helped now, actually I was adding them up, I'm now just about to breach 1,000 businesses that I've helped set up. So there's a handful that I've actually worked in myself, and then I've got about 1,000 clients that I have helped set up, from startups to multinationals. So a whole variety of experience, whole variety of sectors. So hopefully you'll learn a few gems today. So that's me. I just want to do a quick poll, if that's okay, Pete. So the quick poll, so we're going to do the quick poll on, have you already set up your business? Are you about to launch in the next 3 months or in the next 6 months? So if you could just select your option, it just gives me an idea of where you are in your thinking and how much research you might possibly have already done. Okay, super. Do we have some stats for us, please, Pete?
Yes. No, the results came through. It was the vast majority of people are within the 3-month mark.
Oh, okay.
Which makes sense. I think most people coming onto a webinar like this after launching a bit late, and 1 or 2 in the 6 months. So a few people.
Oh, okay, perfect. Okay, that's good to know. So it means you've got a little bit of time to do a bit more research. So and so you'll be ready to go, and you'll be launching super hot straight away. Excellent. So most people will be, I'm assuming that most people are new to setting up a business.
Yep, that's the result we had. Most people were first timers in running a business. And I mean, we had a few people answer the second question as well. Thank you for that, guys. I think if I can paraphrase, how do I get the legal stuff out the way and start selling?
Well, yes, absolutely. You've got to get that done before you start selling. So yeah, we'll definitely get through that. No problem.
Okay. Yeah.
Super. So, I'm going to. So, apologies. I am assuming, obviously, because you are mostly new to the business. So, I don't want to teach anyone to suck eggs, but it's better to tell you than not to tell you. So, the first option, first question are. What are the funding options to me, and how can I access them? We have a quick slide, hopefully, Pete, just to go through, and I'm to show the different things of how you can fund your business, and then I'm going to go through in detail. So you've got the savings, debt, equity, and the different funding options. So if we drop that back down, and I'll talk about these in details. So when you start your business, you need to also ascertain how much money you're going to need. So that comes neatly on later on. We will be talking about business plan, and that's when you ascertain exactly how much money you'll need. But assuming, for example, that perhaps you might need 25 or 50k, that's often initial starting. If you might be looking at some big venture and you need 1 million. But whatever the number is, you've got to think of where you're going to get that money from. So the first option, of course, is savings. So you may have some savings that you've built up over the years. You may have a redundancy amount. Wherever it's from, that is a good option. The good option is, because it's just your decision, so it's quite quick. So you can put that straight into action and start working for you. Word of caution though. So if you are using your savings, as with any business, obviously you are backing yourself, so can work out your own risk, but you do have to think about what will happen if I invest my savings and then I don't get it back again. So you have got to think about, just like if you were investing in any other business, not just your own, am I willing to risk that money or not? So, so think about if you do still need to keep a bit of a rainy day fund, or and therefore how much can you actually put into the business. Now, these different ways of funding your business, they're not in isolation. You might actually do a mix of different ways to fund the business. The next one is debt or loans. Now, this is really interesting for startups at the moment. Because due to coronavirus, just so if anyone's watching this in a couple of years' time, there was in the history, we unfortunately went a very sad time, this pandemic that shut everything up for a while. But anyway, there are some different loans available, but one in particular that is really useful for new startups, and that's called the Future Fund. Now that is for businesses that are putting in a lot more money than if you're talking 6 figures. But the good thing about that one is the government backs whatever your investor is putting in. It's a little bit complicated, so it's a bit too complicated to go into in detail in this webinar, but there's lots of details on the British Bank pages, and I'll be delighted to talk to anybody about that if that could be applicable for their business. Unfortunately, the other types of loans, the bounce back and the coronavirus business interruption loan, those are for current businesses, they're not for new businesses. So you're back to the traditional ways of financing your business. You'll be looking at potentially a loan. Now, because it's a new business, that will depend quite a lot on the owner's credit rating, and also to make sure that you've got a business plan, which again we are talking about. So it all circles around nicely. So for the debt, again, you need to be thinking about what you're willing to risk, because a lot of the lenders will ask you either for some sort of personal guarantee or for some sort of security, depending upon how much you're looking to borrow. Now, there is a business startup loan that you can get from the government that's 25k, so that's a good one. You still do have some, I believe, some personal risk in there, but it's a good quick one if you're right at the beginning, because it's a nice 25k to get in. Now, there's of course the traditional banks that you can get the money from, but there are new lenders emerging, so you might want to look at a broker who will be able to offer you more options. Also, in your area, depending on where you are, a really, really good place to start is your local economic partnership, the LEPs, because often they've got a big funding arm, and often they can be lending money at quite a cheaper rate, quite a very, very really attractive rate. So they're a good place to look as well. So there's lots and lots of different options, but again, you've got to think about what is your relationship with debt and what's your risk appetite on that. The next one is equity. So that could be your savings being put in as capital, because you could use your savings putting it in as capital investment, or you could just be lending it to the business. But you could also be looking for other equity partners. So you might have somebody that either wants to join the business with you and put money in, or they might want to be a silent partner and put money in. Again, make sure you get really good advice, because there's lots of pros and cons of that. And you want to make sure that you have all of the legals synced up nicely for that, to make sure there's no future problems. Just one final little tip in this section. Do make sure that you find a bank that suits you. Some of the banks do have lovely bank managers. Others, you don't get a bank manager, you will just be through to a call centre. So you've got to think, what would you like from your finance partner, and think about what you would go, what you need and what is the right fit for your business. Now, there are other funding options, but I'm not going to go through all the detail now, because, well, we could be here all afternoon, and we need to be doing other planning for our businesses. So just very quickly, other different funding options. If you are going to have a good debtor book, you might be able to get some factoring, so that's borrowing against the invoices. You might be able to get lending on credit cards. Grants are always a nice option, because grants you don't have to pay back. So do have a look in for your particular sector. There may be some really good grants available. And there might be some other investors that might do some sort of private lending and things as well. So there's lots and lots of different options. But of course, you need to know how much. And that's why the next question is, how do I prepare a business plan when I'm not a finance person? Because you need that business plan to know how much money you're going to invest. Sorry, Pete, you've got a question or something. You're on mute again, though.
Oh, I've done it again. Sorry about that, everybody. Again. Just before we move on to that, I just wanted to say, because I know this is a very different section, we've had one or two questions come in already.
Yes. Okay, let's answer them.
Well, we'll do a Q&A in a second. I was just going to say, could people, if there are questions you've had about any of that, such as how to find these sources, please pop them into the chat. For now, we're doing a Q&A section after the next section that we're running through. We'll bring them all together, because they do tie in nicely, don't they? 2
questions, 3 questions. Perfect. Thanks. Pete's here to make sure, keep me in order. Make sure I don't miss anything. Okay, fantastic. So the second question about your business plan. How on earth are you going to create a business plan? You're not a finance person, you're not set up a business before, so what do you do? Well, there's lots of different things. There's things that, before you get anyone else involved, there's things that you should, as the business owner, or the business founder, in fact, think about. So just pop up the slide quickly, Pete. So there's a few things that I want you to think about first. Okay, so hopefully you might already have answered the first question. Decide what sort of business do you want to run. So that's, do you want to have, you might be very specific. You already might know, you might want to have the largest hairdressing chain in England. I don't know, it could be anything. But what sort of business do you want to, what is it, services, goods, what sector? Think about to narrow it down. Secondly, think about, is there a market for it? So now, market research, I've written quite a few different blogs and articles on it. I can't underestimate this part enough. Market research, market research, market research. It's really, really important. If you're going to start a business, you need to understand your market, and you need to understand your customer or your client. You need to know, what do they want? What is their price points? What are they actually looking for? What are their, what are your competitors? There's a lot to look at, so that's really important. That is the first thing that I did before launching my business, is I spent a huge amount of time on market research to make sure it was the right thing, and what did I want the business to look like. You can then create your business goals. So these could be something very simple, as in, I want my business to create 50 grand's worth of salary for me each year, so be big enough for that. It might be that I want to have 10% of the mobile phone market. It could be anything that you want to be, but those business goals need to be measurable and they need to have synergy to your plan, to your vision. Your vision is really important at the start. So to create a plan to achieve your goals, you need to have lots of sub-plans underneath. You need a sales and marketing plan, an operational plan, a finance plan. Often when people talk about business plan, they get a bit confused and all they think about is the P&L and the cash flow. The business plan is so much more than that. The numbers tell a story, but you actually need to have actions and what the essence of your business is within your business plan to be able to create those numbers. Now, if you are a newbie to business plans, I would recommend that you do use one of the tools that are already out there. You don't need to reinvent the wheel. There are a huge amount of tools that are already tried and tested. So there's just a few different tools here that can be part of your business plan. So VMIS, so that's making sure that you have a very structured plan. You've got your vision at the top, what your mission is with your business, your objectives, your strategy, your tactics. SWOT analysis is really useful because you can do that for the SWOT analysis for your total business or for different elements of the business. So you're looking at your strengths, your weaknesses, your opportunities and threats. Very, very powerful tool. Don't underestimate that. And do as well bring other people in to think about those. So if you need help on those, you might have your focus group. You might have some really useful people that can help you, that you can brainstorm with on these things. The PES, looking at the political, economical, social and technology factors. So all of these things are really useful things. And your business plan, it can be as small or as large as you want. The key thing is that it needs to tell the story. You need to be bought in. People that need to read it need to be bought in. Now, it is a very overwhelming thing setting up your business plan if you've not done it before. I mean, fortunately for me, that was part of my job before I set up my own business. So I was very used to writing business plans. But, to somebody that's never done one of these before, it can seem awfully overwhelming. Now, so don't panic. There are a few good ideas that you could do. There are lots of places on the web that give you frameworks that will actually take you through the process. But what I think I would probably say is the top thing, and actually is something that I did many years ago, but even well before I set up my business, was there are a lot of business planning workshops. So workshops where a business consultant will very carefully, within, it might be a day workshop, it might be a 2-hour workshop, but they will go through a clear, proven methodology to take you through the process of thinking for that business plan. I do recommend taking that time out and going to one of those workshops because they're really good. And I can, if anyone's interested in those, I can recommend some people who run those types of workshops that will be really, really useful. Actually, something powerful from that.
Actually, Nicky, I was just going to say, if there is anybody on the chat interested, if you just type a 1 into the chat when we send out the recording for this, which we will be doing along with the slides, we can also include the reference to those people.
Perfect. Yes, because it's just useful to have that time, and it's also time that you're just really focusing on your business without any other distractions, whether it's your current work or your family or whatever else. You can just have that time to really just be thinking on your business. Okay, so that is the business plan. So I think, now we're going to do any questions that have popped up from those last two sessions.
Yes, we are. Right, so questions. So we had a few questions come through. Please, if any others occur to you, do type them in now. We've got a few minutes on this section here. Okay. So the first one we had come through was, when it comes to getting loans from the banks and so on, is there a way to get a better rate? So you said it was personal background and risk. Is there anything else you can do to influence the rates you get from the banks?
Yeah. So most of you said are 3 or 6 months away. So there's a lot you can do before you get to the point of actually borrowing money. It's on the early days, and to be honest, even when you're well into your business, when you're an established business, one of the big factors on the rates is your personal credit rating. So I do recommend go and have a little look at your Experian report, see where you are on the credit rating, and if it is dire, you've got 3 to 6 months to turn it around, and you can change it in 3 to 6 months. There's some really good tools on there to show you what you need to do to make it look better, and you can improve that within the time. If it's already looking good, then fantastic. Then the next main thing will be down to your having a really credible business plan, and also depending on your sector of which bank to look at as well, because you will find that some banks have different risk profiles for different businesses. So I do recommend doing a bit of shopping around. However, don't go through full credit searches, because that will then pull down your credit rating. So get people to do soft searches and give you some indicative rates so you can compare and contrast. If necessary, looking at a broker is a good way as well, because they will know the market really well. Sometimes they can even get better deals from your own bank than you can as well, because they are experts in the market.
Okay, wonderful answer. Thank you very much, Nicky. So I think as well, when we did a draft run, a similar question came through from someone, and you mentioned, I think, that you actually know some of the banks, which banks are better for which sectors. Is that right?
Yeah, so, well, it does vary,
right.
But so you do have to find out what their current appetite is, but you will, to be honest, most of the banks won't be particularly interested in looking at, for example, restaurants and things at the moment. Now, that is not necessarily just due to the current time. That restaurants notoriously have a high failure rate, so there will be ones that don't. So the best thing is just to ask. There are some that won't be interested in construction as well. So there are some that have bigger risk appetite. So Clydesdale is an example of one that is usually is quite good with some different types of businesses. Barclays and Lloyds still are good with construction. In fact, Barclays has got a really strong property section, but they are about serious property investors. They're not talking about just one property, you're talking about a whole portfolio. But so yes, there are ones that have, that have their favourites.
Okay.
And also you do have to look in different regions as well, because of course in different regions you'll have different expertise. Around here you won't have any sort of shipping specialists, where if you go down to Southampton or if you're in London, you will have shipping specialists. So there will be some region specific specialists as well.
Yeah. Okay. Wonderful. I think one other question on this, and then we'll move on to business planning. We've just had a really good one come through, which I know you're keen on. The second question: grants. Being given money sounds fabulous. A few people picked up on that. How do you locate them? How do you track them down? Is there a group you can go to? Are those LEPs helpful?
Yes. So I would say 3 good places to go. The LEPs are an excellent place to go, because they will know, because some of the grants are national, but some grants are regional as well. So the LEP will be really on top of what the grants are for their area. So they're a really good starter. There's also on gov.uk list all the grants. However, there are thousands of pages on that. So it's not somewhere, and it's not very good for searching. So once you know what grant you want to look at, you can go to gov.uk, but I wouldn't advise you to just read through there, because you'll still be reading through it in 6 months' time. The other place that is very, very helpful is Innovate UK. So that's INNOVATE UK. They are really, really good. They're not for profit. They are specifically there to help businesses that are established grow, and also new businesses. So they are very good at signposting you to different funding and to grants.
Yep, excellent answer. Thank you, Nikki. We'll come on to the business planning question now, but I'll just say as well, we're going to include links to these specific sites you mentioned in the email that we send through with the recording. So please do keep an eye out for that. So Innovate will be on that link. Don't worry about getting it down. We had a great question on business planning. So could you explain just a little bit more about how you do the business research part, the market research? So someone's asked specifically, actually,
Yeah.
do you contact existing businesses about the product or service you intend to provide to establish their need and price point, or are there alternative options?
Okay, so for market research, you do have to develop your market research depending on what your sector is at as well, because you might be a brand new product, so there might not be anything to compare about. Then again, it might be something that there's already hundreds of thousands of businesses. So I would go look at 3 different areas. Well, there's probably 4 areas you could go for. One, go to where your clients will be. So it may be, if they are all in a certain area, they might have some sort of group, or some sort of forum, depending what it is. If you're going to set up a new beer, then you would go to Camera, where all the real people that love beer are going to be, so that you can go and ask questions. If you, let's go for, say I'm going to develop a beer. I'm going to develop a beer this afternoon.
I like this one.
Okay, let's make it real. So you'd go and talk to your actual consumers. So contacting the Camera group would be excellent, because they will be people that will be your key target audience. You would also go and look at, there will be professional organisations. So there will be the craft brewer organisation. There will be a professional organisation out there somewhere. I know there certainly is, because there's loads of different awards and things that do them. So there will be, so if you can find a professional organisation, they are usually more than willing to give you lots and lots of info. Thirdly, potential employees is another good one as well. So the master brewers, so actual people that you'll need in your organization, is good to go and talk to as well, because also you need to understand where are you going to go and find your key personnel. And finally, don't be scared to go and talk to your potential competition, because don't forget, they all started somewhere as well, and a lot of them will be happy, more than happy, to talk to you about their story. How did they start? What did they do when they started? What things have they learned along their way? What were the things that really worked for them? What didn't work for them? Now, you will get some that will not be happy and just will say, I'm not telling you anything, but you will be surprised at how many will be actually more than happy to share their knowledge. And so I would recommend those 4 groups to think about. And you do want to, it's a big, huge data dump is what you're doing, because you just want as much information as you can. Then once you start formulating ideas, you've got all that data there to pull together, so that you can come up with your plan.
Okay, so if I can summarize, go wide, go big, go to as many people, and then once you've got the big picture, bring it in, and part of your business planning, that's where you're looking for specific numbers.
Yeah.
Okay, excellent. I really liked the employees one, especially at the moment. I guess there's a lot of people looking for work, so they're open to conversations.
Absolutely, this is a good time for an employer, because you're able to, there's lots of people on the market. So, completely different 6 months ago when it was almost full employment. So, sorry, it sounds joyful, but there's always a pro and con of every situation.
Silver linings. Okay. So I'm conscious of time. We're going to have another Q&A section at the end, and I know we've got to go through another few big topics. The person who asked that question and any of those questions, hopefully it's answered them. If not, please put in the chat and we can pick it up in the second half of the Q&A. So Nikki, back to you, and I believe we're talking about structure.
Yeah, fantastic. So structure is really important for multiple different reasons. The reason why it's important is, one, it's how you trade. It's the legal entity of where you're trading. So it affects how you're taxed. It affects how you record your information, it affects what reports you need to do, it affects how you get paid. So there's lots of different reasons. So I've put up 6 different options. Now, this isn't necessarily an exhaustive list, but often I can talk about this, just this one slide. I could talk about this for an hour, if not more, but you don't have an hour for this one. And, you know, we're not quite ready for our afternoon siestas. So I'll just go through some quick pros and cons on each one to help get your idea of why you might want one or the other. So sole trader is literally if you are a one woman band, that you're just wanting to do something very simple. Generally, sole traders are smaller, and so it's very simple. It's just basically you report it on your personal tax return. That's very simply taxed. It's just on your income tax. It's super simple. So the pros are it's simple, it's easy to administer. The cons is that it's not a separate legal entity. So if you have any problems with your business, of course you'll have your professional indemnity, etc., but ultimately you could potentially be risking your own assets. So there is the risk there on a sole trader. Also, it might not be the best way from a funding perspective or from a tax perspective, because it could potentially be more expensive being on the sole trader. Now, these I just want to caveat, everybody's situation will be different, so you shouldn't make your final decision on these things until you have been through all the different things and think about how it works for you personally. So it's not just for you personally for the business, but also for you in total, because you might have other streams of income and things. So there might be other factors that affect this. Second one is partnership. Now, this is a simple partnership we're talking about here. So say Pete and I decide tomorrow that we're going to set up a nightclub. Okay, we're going to partnership tomorrow, going to set up a nightclub. We're bored of being at home all the time, so we want to have a super duper nightclub, a socially distanced one, obviously. And we decide we're going to set up a partnership to do that. Now, you have to remember with this one, again, it's quite simple from a tax and an accounting perspective, because it's just added up together. It goes onto your personal tax returns. You also have a partnership tax return. However, the cons of this one is that you both have responsibility for whatever the other person in the partnership has agreed to. So if Pete goes and agrees to say, yeah, we're setting up this nightclub, I'm going to go and source this really expensive DJ that's going to cost us 100 grand for our opening night, I'm stuck with that as a partner. I still have to work out to make sure that we can pay for that, because he's gone into agreement with the DJ as a partnership, and as the other partner, I am jointly and separately jointly liable for that. So you do have to go into with your eyes open when you're going into a partnership. I do recommend that you have a very clear partnership agreement. The partnership agreement needs to talk about how do you get rid of the other partner if you fall out. Sorry, Pete.
It's understandable, Nicky. I mean, I don't take it personally.
It needs to talk about how you're going to share the profits in that partnership. It doesn't have to do that, because if it doesn't say that, you can then be flexible. But of course, if you haven't put it in, besides it can be flexible, it also means it can be something that you can argue about later. So if you just do if I do all the work, Pete just sits back and just drinks his cocktails, I might be a bit annoyed if we have 50-50 profit share. So, you need to be very specific if you are going to get upset about things like that. So the other one is a limited company. Now, a limited company, that is something that is registered at Companies House. So it has clear visibility. So when you do eventually file your accounts, other people will be able to see on the England Wales Companies House. They will be able to see your abbreviated accounts, what they're called filleted accounts now, but they'll be able to see your balance sheet, they'll be able to see who your directors are, and they will see some of the detail of the shareholding. So it's transparent, it's a separate legal entity. So if everything goes absolutely awfully wrong, as long as you've not done yourself anything wrong as a director, then you can walk away from it, and you have to close it down, but you do reduce your risk by having it as a limited company. It also can look more professional. In fact, some big companies will only deal with limited companies. They won't deal with sole traders or partnerships. So if you're trying to get, if you've developed a really great packet of crisps that you want on the shelves in Sainsbury's, you're very unlikely to get on there if you're running as a sole trader. You probably will have to be running as a limited company. So limited companies, the pros of it looks professional. It's a separate legal entity. There's potentially some tax advantages of it. The cons are there's a lot more administration. There is, it may cost you more time and more money to administer it and look after it. And you need to think very carefully of how you want to structure it. Because once you've got shareholders in that, you need to make sure you've got shareholder agreements. You want to have proper agreements on what type of shares you have and everything else as well. So you do need to think about it very carefully about who's going to be involved in that limited company. The next one is a limited liability partnership. So it's similar to the second one, to the partnership, but that does have some legal protection similar to a limited company. Again, that is on Companies House. It's registered, so people can see details of it. But from a tax perspective, it's taxed just the same as a partnership or as a sole trader. So it just all goes straight to your income tax. So that one's quite popular for a lot of professional organisations, but it is starting to go out of popularity because even some, big solicitors or accountancy practice or whatever that are limited liability partnerships are moving across to limited companies or even PLCs. But we're not talking about PLCs today. We're not launching straight onto the FTSE today. That's for next week. There's also, you could be thinking about if you're doing more of a charitable organisation, or it might be more of a community organisation, so not for profit. So if you are doing something like that, there are different options there. I'm not going to go into the detail on that, but there are different options of how you can set that up. And again, happy to have a discussion offline about that. Another way is franchise. Now, this, again, it could actually take the form of any of the former entities as a franchise, but I think it's worthwhile putting franchise there because it's a bit more of a set arrangement. So you'll have with the franchisor, you'll have set arrangement of how you do things. And sometimes for somebody that's going into business, it's slightly less scary than starting everything from scratch. So because there's lots of frameworks there, often the marketing's there, you might even get some clients straight away from it. So a franchise is another option to look at. It's not necessarily about the legal entity, but I just think it is a good option to be thinking about as well if you are thinking of launching your business. Okay, so I've just done a very quick whistle stop tour really of the different entities, so it might be just worth thinking about what type of entity you may want to have a look at.
Nicky, I was going to say we've had a question I think is fairly simple to answer. Can you go from sole trader to limited company? So to get up and running quickly and smoothly, can you go sole trader and then shift to limited company later, or do you need to do it up front?
Yes, you can. Now, there are pros and cons to doing that. Now, there used to be actually quite a lot of benefits from going from sole trader to limited company. Some very clever tax advantages and things. There's not so much of that anymore. A lot of the loopholes got closed a few years ago. However, yes, it can go. It's a good thing. If you are not 100% certain about where you want to go or how fast it's going to grow, as you don't want to commit to that burden of setting up a full limited company, there's nothing wrong to start off as a sole trader first, and then you can incorporate at a later date. I would just say the only caution I would say on going from one to the other later is often, 2-3 years in, you're so busy trying to grow your company, you may not want to be thinking about having to sort out a different legal entity at that point. And that's why sometimes it's just easier to start straight from the limited company on day one. But, if you're not sure if it is going to work out or not, I can see the point of starting as sole trader.
So if you've got an aggressive growth plan, probably jump to limited, otherwise sole trader and convert when it works. Yeah, makes sense. Okay, so I think now you're going to talk about the fun stuff, which is how we get our money out.
Yeah, I'm just going to go this super quick, guys, because a lot of this you hopefully will already know and you'll be familiar with. So what's the most tax efficient way for you to be paid from your business? So it will depend upon what structure you've chosen. So if you're a sole trader, you don't have any choice. It's all will be done as income tax, but with some national insurance as well. So what I'm going to do is for the minute, I'm just going to assume that you are setting up as a limited company to answer this question, okay? So when you're a limited company, you can choose to extract your money in a variety of ways. You could take your money out as salary. If you're profitable, you can take dividends. You always want to be taking out reimbursable expenses because they're tax efficient, because there's no tax to pay because they are for the business, so you can get that back. And there's director's loan. So you might have put money in at the beginning. You might have gone, right, I've got my redundancy, I've got 30 grand here, I'm going to put that into the business as a loan to begin with. And then as you start getting money in the business, you can repay back your director's loan, and that then is tax-free. Well, it's tax-free if you're repaying your director's loan. If you're taking a director's loan and you didn't put money in firstly in the business, then actually there could have tax consequences. The other one that I didn't put down on the slides was pensions as well. That can be quite a good way because it's a pretty tax efficient way. So again, if you put your 10 grand, 20 grand, whatever you want to do on pensions and put that regularly into your pension pot from the business, very, very tax efficient because it's growing into your pension portfolio, and also you will get corporation tax deductions if you're putting it in as employer's contribution. So the key thing is to look at how much money do you need to have for your business and then profile it. So what we often do with clients is we'll look at how much they want to have, look at what the business is looking like, and then forecast some different ways that they could take that money out so that they can look at what could be the most tax efficient way. So it's when you're doing it with blank page, it's quite tricky. Obviously, once you start having some idea of the size of the business and what your requirements are, you can profile it quite quickly. Okay. So I'm assuming no questions at the moment on that, so I'll just go launch straight into the final part because I know I'm already 3/4 of an hour in and I'm only just about to start the fifth question. So the fifth question that I was hoping to answer for you guys today was, what's the top bookkeeping and accounting tips that you should know? So very quickly, but I can do more detail on anything that anyone asks in the question because I want to make sure I have as much time for questions as possible at the end. So the first thing I would say, you need to look at what your business is and what it's potentially going to be like for the next few years, so that you can choose the right system for your business. If you choose the right system for your business on day one, it can quite quickly become not applicable for your business. So you need to look at, is it going to be able to grow with your business? Does it have the functionality that you will need in 3 to 5 years? Because trust me, moving between accounting systems is a project in itself. So it is a good idea if you choose the system that you're likely to be with. No, I'm not saying for the system you'll be with forever, but the system that you will be with for a while. Now, for most accounting systems, that most of them offer trials so that you can play around. There's lots of videos. I myself have written lots of articles and pros and cons of different ones. So don't be afraid to ask. There's not actually a definite answer of what is the best software, because it really does depend on what your business is going to be like, depending on the sector, depends on the volume, it depends on what functionality you're going to require. Because, you know, for one business, I might say Xero is the right one, another one I might say QuickBooks, another one I might say Sage. You know, certain businesses I might say, you know, you're going to be so big, you need to go straight into SAP. It really depends on so many factors. So it's important to go in with an open mind and have a look. Second top tip, keep on top of it. Don't just put it all to the side and then worry about it in a year's time when it's time to do your accounts. Because trust me, you will have forgotten to include things. You'll have forgotten what you have included, and then you'll be so frustrated when your bookkeeper or your accountant's asking you questions on it, because you go, I don't remember, that was 15 months ago. I don't remember who I had that coffee with in that coffee shop. So the best thing is to keep on top of it right at the beginning. The advantages of that are numerous. One, it will stop frustration in a year's time. Secondly, it means that you can measure your business from the get-go. If you do your accounts on a weekly or a monthly basis, you can see how you're performing, and then you can react to that performance. Because if you don't have that data, you don't know, you're running blind. Yeah, I'm sorry, I say that's thirdly, yeah, it will just be more efficient if you are doing it regularly, because you'll be able to put decent processes in it, and just be so much easier for everybody, for yourself and for anyone else that's helping you. If you hate paperwork, if you hate doing any type of expenses and things like that, outsource it. You know, if you don't like doing your expenses yourself, get a virtual PA. If you don't want to if you get fed up of, you know, making sure your invoices have got out and you're collecting your invoices and you're reconciling your bank, if you don't want to do that, that's absolutely fine. Outsource it. Get a part-time bookkeeper. Use a full functioning outsourced finance department like that we would offer. You know, just focus on the bits of the business that you want to do and that you enjoy, because you want to enjoy the journey of growing your business. So use your talents to the best places that you can. Finally, always ask. If you're not sure about something, don't make assumptions. Ask either, you know, ask for a peer, ask your accountant, ask your bookkeeper. You know, if you are thinking, right, okay, I'm intending to build an office in my back garden, what does that mean? Can I put that through? Can't I put it through? Just ask. It's best, and it's best to ask these things before you do it, because especially if you don't go and think, oh, it's fine, I'll be able to expense it all. Well, then it's going to be quite an expensive mistake if you then find that your accountant has to give you the bad news. Sorry, you can't put that through your tax return. So do ask about things before you do them. Do a bit of planning. So yeah, but it's you know, don't get worried about the bookkeeping, accounting. Every business has to do it. It's a necessary evil. You want to have it done as efficiently as possible. You want it as neat as possible and as auditable as possible. And if it's not your bag, that's fine. There's plenty of people that will be able to help you with that. Okay, Pete, I've been through the questions. Is this the time for opening it up?
It is indeed. Yes, thank you very much, Nicky. So the number one. Okay, so one of the questions I got down was. Apologies if you did answer this when I was chatting. What can we claim back when it comes to, you know, can you give some rough guidance on the kind of things that people don't commonly think of, that actually there's sort of money left on the shelf, as it were?
Okay, so there are some exact rules about what you can and can't claim. there. And also there's different rules depending on your whole expenditure to whether it's VAT and things as well. So one of the basic things is that the expenditure has to be wholly and exclusively for the benefit of the business. So if you are buying something because it's a nice to have and actually you've got some personal benefit in it, that it's quite likely you won't be able to put it all through your business. You either won't be able to put it through your business or you'll only be able to put a percentage of it through your business. So I would say that most things, if it has got a tangible link to your business, most things you will be able to put through. So there are some quirks in the system. You'll also find there's some things that you can put through as a sole trader, that you can put through as limited, that you can't put through as a sole trader. So for example, if you are, as a sole trader, you generally can't claim food. It's really annoying. Now, if you went to some overnight thing somewhere, you potentially might be able to, but often you can't. Whereas if you're a limited company and you're an employee, you would be able to claim subsistence, and you would be able to, because you're treated as a different type of thing. But so you do that. That's also another reason why sometimes it's better to be a limited one than sole trader. But most things you can do, as long as it has got a strong purpose and it's got something to do with your business. One thing that before you go and get a new wardrobe, before you go and buy a load of power suits, just be aware, things that have got a personal element, so like food, so like clothes, you generally can't put things like that through. Now, there are some exceptions. So if things are branded, so that's why you'll see like the Barclays bike managers, they will have jackets on, but they'll have a Barclays logo. So then that is allowed. If it is safety equipment, so, you know, steel-toed boots, they're allowed. But if you're just putting through general, like, oh, I want to put some Louis Vuitton shoes through, that's not going to be allowed, unfortunately. So it's got to be strictly for business, and it's not going to have a personal benefit.
Okay. It sounds like it does really depend as well. Your setup and what you can and can't claim for depends Absolutely. A little bit on what you're going to be doing. So if there's anyone with a specific question they want to take advantage, please do put it in the chat now.
Absolutely.
We had a quick question just for people, I think, thinking about the alternative. How much time should they expect to be putting into their accounts a month? So if they are kind of thinking about doing themselves, what's a realistic expectation for someone who's not super experienced to do the whole thing on their own part per month?
Well, that is a bit of how long is a piece of string, because you know, you will get some businesses that all they're doing is they've got one main client, and so it might be one invoice for 10 grand a month. You might have another business that they're selling paper clips, so you know they might be selling thousands and thousands of boxes of paper clips a month, and then it's very different. So it will depend on how much you've automated it as well. So the paperclip guy might have automated it all, so it might be really easy. Another paperclip guy might have it all manual, so it would take ages. But I would assume at least half a day a week for the start. But you know, the busier you get, the more that you will be doing. So you know, getting to the point that you'll need a dedicated person. Yeah. So it's
a balancing act of the amount of the volume of transactions, the technology you take the time to set up, but even then you are talking at least a few hours a week.
Even then you're still talking a couple of days a month at least.
Yeah. Okay. Well, hopefully that's answered that question for that person. If not, please do come back. We've had another one come through, which I actually can't even guess the answer to this one. If you operate as a sole trader, can you employ people on payroll?
Yes.
Okay. A good answer. Are there any quirks to it? Or is it nice and clean?
You have to register a PAYE registration scheme. You need to be registered, obviously, as a sole trader. But yeah, you can register a payroll scheme.
Okay, nice and simple. Hopefully that's answered the question for you. One more actually. When doing the business plans, because it sounded like if you can get the business plan right, your funding's more effective, you can make decisions about structure, there's a lot of things you can get done. So we've had a few more, I think others have picked that up. How far ahead should a business plan look? Reasonably.
Good question. Okay, now that over the years, there's been different trends. So, people used to talk about a 5-year, even a 10-year business plan. What I would say is it needs to be at least 18 months, if not 3 years. Now, bearing in mind, I think it's 50% of businesses usually fail within the first 2 years. That's why it's really important to get that first 18 months to 2 years right, because that is the point where people have difficulties. So concentrate on 2 to 3 years. And then at that point, you can reassess your business and then you can do your next 3-year plan.
Okay, excellent question. Thank you for the person who asked that. Again, hope it's answered it. I think we have time for one more question.
Perfect.
And I think it was, so if people are, you and I have talked about this actually earlier before we did this, but someone's sort of asked, how do I get people into my how do I outsource? And I think it touches on the wider question we've asked about how to set up a virtual team. So what would you say are the things people should look at if they are considering outsourcing, not just accountancy, but any of the services, marketing, things like that?
Absolutely. So it's actually an element of your business plan, because when you're looking at your business plan, look at your do a SWOT analysis of yourself. Look at your own strengths, weaknesses, opportunities, and threats. You might, if you already have a team around you, you might want to do it for the whole team. And so then what you want to do is, you might have super strength in sales and marketing, for example. So that's no-brainer, then you're doing that all internally. If, however, you've got certain areas that you just don't have a clue on, that's where you need to be looking at, right, I want to accelerate my business, want to go as quickly forward as possible. That's when you get in the expert teams. So there's lots of different areas that you could outsource. If I think about my team, obviously I've got all my accountants and bookkeepers and that is my business, but my PR and marketing team, they're external consultants. My HR people, external consultants. My lawyers, external consultants. So, for the bits that I can't do or my team can't do internally, we go and get our experts. And so it makes our team makes our virtual team much better, much stronger, and we, utilize our strengths.
Cool. And just actually, because we've talked about this in the past, I was wondering if the attendees would be so kind. Would you be interested if we did a webinar in future about how to build an outsourced virtual team? So not just accounting, but the whole kit and caboodle. What can that look like? If you think that's maybe a better alternative to paying for people, employees, and so on, that risk, just pop a 2 in the chat.
That might not be your bag. You might not be wanting to build a huge empire with thousands of people. You might want to streamline. You might just want to have your sales and marketing team, or build your design your beer, whatever else it is, and then just outsource the rest of it. So that can work well. So if people are interested in that would be lovely to hear, because then we can develop upon that and we can give a lot more information at a later date.
Yep, wonderful. Okay, and a few people coming through saying yes, they are interested. So I think we may well pursue that. That's it for the questions. If anybody has any more, please drop them in. I'm going to save the chat. Nicky can get in touch with specifics. A toddler has joined me, so I think we've reached the end of the webinar.
Perfect.
Oh, she's gone. We've got ages. So, Nicky, do you want to quickly round it up?
So if you're starting a business, we haven't put you off. It's really exciting journey. Do enjoy your time building your business. Don't just think about the end when you're going to be a super duper millionaire. You need to enjoy your time as well. So think about making sure that you really do enjoy it. I've got one particular business owner. He's super good from the start. He's always made sure he's split out time still for holidays, even though he's been doing huge growth and everything. So make your business work for you. You're not working for your business is working for you.
Excellent. Put yourself at the center of your business. I love that. Okay. Thank you so much for everyone for joining us. The recording will probably be out back end of the week, I think, for anybody who wants to rewatch, along with the slides and all of the other things. And thank you for joining us.
Thank you very much, everybody. Nice to see you all.